let's go ahead and get started. So welcome everyone, welcome to all of our participants to our regularly scheduled Thursday afternoon Innovative Business Advisors webinar. And as you can see, if you're looking at the screen, you may only be able to see me, but there are three of us on the webinar as panelists today. Myself, Steve Denny, and Terry Lammer. So we were just joking earlier that we are the initial triumvirate who started these webinars back in March. And some of us have come, some of us have gone. I was missing last week, and this week we're all three back together. So glad to be together working again on this particular webinar. I don't want to spend a lot of time on the introduction because most of you, I can see your names, the participants, and I recognize names as people who have been with us for quite some time now. I will quickly remind you that we are on a Zoom portal, and within the Zoom portal, what we prefer that you do is if you wish to ask questions, that you type your question into the Q&A dialogue, and I will monitor that Q&A dialogue throughout the webinar and bring any of your questions to the panel, and we will do our best to answer those questions verbally. If we're unable to answer them during the webinar, we will post both the recording of this webinar and a Q&A dialogue box, if you will, as a Word document, so that you will have access to both the recording of the webinar and the Q&A. Additionally, Steve will be driving the PowerPoint presentation. The PowerPoint will be posted for your access following the webinar. And if there are any specific Treasury, SBA, other docs that we reference, we will post those so that you have access to those. And if not the document, a link to where you can find that document on the Fed's websites. So with that said, our topic today, you all know that we had a new iteration, if you will, of the COVID CARES Act signed into law on December 28th. We began with an introduction to that last week. We're going to do a little more of a deep dive into PPP this week. So with that said, Steve, I'm going to turn it over to you and let's get started with the topic.
Awesome. Marquita, wonderful to have you back. We missed you last week. John Vitale did a great job filling in for you, but I always feel most comfortable with you at the controls. So honored to see you back. And Terry, welcome. We haven't seen you in some time, so really excited to have you with us today as well.
Great to be back.
Awesome. Well, folks, I want to start by just saying we're going to take your questions throughout. So there's a lot of information in the Economic Aid Act, which was part of the Budget Reconciliation Act, which the President signed back on December 27th and actually became law on December 28th. So today we're going to focus on PPP and going to give you an overview of the new provisions, but please, put your questions in and we will cover those as we go forward. You may see the background looks a little different today. This is, as Terry and I are both part of different peer network groups, I want to put a quick plug in for peer networks. If you're a business owner, I strongly recommend that you guys join a peer network group. Once a month investment of your time is just so meaningful. And I just came out of today's full meeting. I happen to be in a C12 group. Their materials are absolutely phenomenal. I can't recommend it highly enough. Terry, I know you're in a Vistage group, and I know you guys have phenomenal discussions as well. And we just highly recommend for our audiences, if you're not in one of those groups, it is an absolutely fantastic use of your time as a business owner. So with that, let's move into the agenda. So again, we're going to talk about PPP. The Paycheck Protection Program opened this past Monday. And I'll give you a lot of the details of that and we'll talk about it in general. Basically, what we're going to cover is some of the new guidance that has been issued regarding paycheck protection programs. We're going to talk about eligibility, and PPP now has what they call the second draw, and the eligibility is a little different between your first PPP loan and your second loan. So hopefully we'll clear up some confusion in that particular area. Then we'll talk about set-asides. This specific program has some very specific set-asides in play, and those may be important to you and your particular business. So strongly encourage you to pay attention there. And then finally, we're going to talk about the forgiveness process, because that process did change as part of the Economic Aid Act. And we'll cover that and any particular questions that you have in that area. So with that as our agenda for the day, let's dive right in. First and foremost, wanted to let you know that it did reopen on Monday. It reopened for first-time applicants yesterday. So the window is open. The first 2 days were set aside for small business. So if you've talked to your bank about this, or you've read about PPP and you had a PPP loan before, or you wanted to apply for a PPP loan, and you are a small business, being a company of less than 10 employees, or a business that's operating in a low income area, they set aside the first 2 days specifically for small businesses. So you may have received a notice from your bank that, hey, hold on, the window is going to be opening, but you can't apply yet. It might be because you're a bigger business and or didn't reside in one of those low income areas. So effective on Monday, the PPP window will be effectively open for everybody in that regard. We've talked to several lenders. Obviously, we had John Vitale from Bankstar on with us last week. Every lender that we've talked with is anticipating a high level of demand. So if you are interested in the PPP loan, either for a first loan or a second loan, we're going to talk about what you need to do now a little later in this presentation, but get yourself in a position and act very, very quickly. The lenders are anticipating that there's going to be a high demand for these loans. And as you guys may remember from last year, the loans ran out of money quickly. And one thing that the Congress did do was in their wisdom, they did put aside specific pools of money for specific types of businesses. But the PPP was only funded to a specific level. So again, once they run out of money, the program will close. So again, it's reopening for first-time applicants. The laws and rules that applied before for first-time applicants stay the same now. So those laws didn't change much. In essence, if you are a business of 500 employees or less, you have the applicability for a PPP loan. So wide open. I would direct you back to our YouTube channel and some of our earlier webinars on the PPP that cover all of those old eligibility requirements. We're going to talk specifically about some of the changes today and really focus on some of those to help supplement some of the prior information that we've provided. So the new thing is that if you had a PPP loan in the past and have already used those funds, you are eligible for a second draw. And you don't necessarily have to be forgiven yet for those funds, but you would have already had to be beyond the period where you are eligible to use them and in effect use those funds. So if you've exhausted those funds, you are now eligible for a second draw. There are some specific things that are related to that second draw. We're going to cover those in more detail. But one of the key differences this time around is there are now 4 new allowable expense categories. So remember, the PPP in the past allowed you to cover 60% of the proceeds in order to be forgiven, had to be used for payroll purposes. The other 40% could be used for effectively rent, lease obligations, and utilities. Now they've expanded that, and there are 4 new allowable expense categories. And we're going to cover that in much more detail as well. As we stated earlier, there is a whole new forgiveness process. And we will talk to you about that process and give you some of the specifics regarding that. And then there is some real clarity on the tax consequences, which is a real breath of fresh air. I think we had shared with our audience that we knew of the rumblings of some of this in the various versions of the law. And I think we were very hopeful that a lot of these things did make its way into the final law, and they actually did. So we've got some really good news to share in that regard. So let's dive into eligibility. PPP window opened, as I said, this past Monday, and the first days for the first draw and second draw eligibility were set aside for the smallest of small businesses, those that had less than 10 employees or happen to be in low income areas. Beginning Monday, it'll be in essence open for everybody at that point in time. There's roughly $284 billion worth of funding in the PPP, and the application window is due to close on March 31st, or the sooner of when funds run out. So again, I want to refer everybody back to, last March and April, that first round of funding ran out pretty quickly, and the banks are anticipating that there is high demand. So they do anticipate that funding will run out before the application deadline arrives. So I encourage you in this situation, do not dawdle, do not wait. If you are thinking about this and think it can benefit you, act and make sure you get yourself in line for the funds so that you do not miss the opportunity window. One of the key differences here is in the past, your application only allowed you to apply for up to 2.5 times your payroll amount. There is a change in what the payroll dollars, how that computation is added. I'm going to cover that in 1 second. But the other key thing is if you are in NAICS Code 72, which is essentially the accommodations and food services industries, if your business operates in NAICS Code 72, you now have the ability to apply for 3.5 months worth of payroll coverage. So that is specific only to that particular industrial classification, but that's a huge swath of businesses in our country. So again, accommodation and food services, if you are in that large classification of businesses, you can apply for 3.5 times your payroll amount. That's a nice bonus in the new law. As I said earlier, if you did not take a loan before, you are eligible to take a first draw loan. If you did take a loan before and you've already extinguished those funds, you are now eligible to take what they call a second draw PPP loan. And there are some specific guidelines for those. First and foremost, to be eligible for the second, you have to have exhausted your original loan proceeds. Doesn't necessarily mean that you have to be forgiven for those yet, but you would have had to use them, meaning that your elected period, your covered period must have expired. Another key eligibility requirement is for the first draw loans, you can have employees of up to 500. In order to be eligible for the second draw, only businesses that have 300 or less employees are eligible. So Congress, in its infinite wisdom, made this second draw only eligible to what they consider to be the smallest segment, if you will, of small businesses. So if you've got 300 employees or more, you are not eligible to take a second draw. Another key thing is, in order to be eligible for a second draw, you had to have suffered a drop in revenues in your business. And the way they classify this is the drop had to be greater than 25% in any given quarter. If you had, quarter by quarter comparison, or if you operated in the full year 2019, the full year 2019 versus the full year 2020 had to have a 25% or more drop. Now, I'm going to tell you that the law leaves a little bit of room for interpretation in this particular area. And I am fully expecting, and many of the bankers that I've talked with are looking for some specific clarification on this, meaning that let's say I had to close my business, because I was a non-essential business and I had to close for a period of time based on the location, part of the county and state that I'm in. And obviously during that closed period of time, you had little or no revenue. But then once you reopened, things went really well for you. And so if you were to judge it based on a quarter by quarter basis, you might meet the 25% threshold. But if you look at it year over year, you might not meet that 25% threshold. Which one of those two is going to take precedence and be the determining factor? We don't know the answer to that question yet, but we fully expect that there will be additional clarification and guidance in the future. And as soon as we do get that, we will share that with the audience on these webinars. So that's one area where we're going to see additional clarification in the future. Another change is that for the second draw, you are only applicable for up to a maximum of $2 million. So remember, in a first draw loan, you could go for up to $10 million, right? I also want to just remind folks that if you are going for your first draw and you do anticipate that you're going to need more than $2 million, remember that the SBA and the Department of Treasury have already said that they are going to audit every single loan of $2 million or more. So just be mindful of the fact that you are eligible to pull that additional money down, but you will be having to go through an audit process when you go through the forgiveness application. So some key things that are a little bit different between the second draw and the first draw. The size of your company, only smaller companies are eligible for the second draw. In order to be eligible for the second draw, there has to be some significant change to your revenues or your business, and you're only applicable to draw up to $2 million on the second draw. The whole criteria regarding reductions in salary and reductions in headcounts, those still apply. And those safe harbor time periods are going to be extended into this whole new draw period also. So we'll have some additional clarification on that. And we're expecting that there will be various notices that you guys will be able to download from our portals once we receive those. Another key thing that is a big change is that they've also expanded eligibility to 501c6 entities, to housing co-ops, and media companies like radio and TV stations. So they've expanded eligibility for PPP loans for first and second draws into those additional categories. So Marquita, anything on any questions from our audience yet on eligibility? Are we fairly clear in that area?
We do. We do have a question, and here's the question. So visualize a company that had 2 locations,
okay,
for the duration of 2019, and late in the year, just as they were entering 2019, they added a 3rd location or 4th location even. The original locations are down. However, the new locations, because of the add of the new locations, they're actually not hitting the 25% threshold. Is that company still eligible?
So I'm not sure that I can give you a definitive yes or no in that particular instance, because I think the rules are really applying 19 versus 20 into comparable situations. But it sounds like that's a situation where if that is describing your company, you may want to talk specifically to your banker so that once those levels of clarification arrive, you can be ready to act very, very quickly, because I think time is going to be important.
Yeah, it's likely that it's the legal entity financials year over year, or revenue year over year, not the location address.
Yes, could potentially be. Yes.
Okay.
And it's going to be, there's a lot of questions that question brings to mind, right? How did they set up each of those entities, et cetera? So I would strongly encourage you to talk to your banker about that situation. If your banker was in a position where they had provided you your first draw of the PPP, then they're going to be relatively intimate to your situation and would provide good guidance for you. But that question brings up to a lot of other questions in my own mind in that regard.
Thanks, Steve.
All right. Anything else on eligibility? So a little difference between first draw eligibility and second draw eligibility. So make sure you pay attention to that. So new provisions. This is really quite fascinating. So Congress has added 4 new expense categories to the provisions. So there was a lot of discussion, and I think Congress must have received a lot of feedback from business owners that it was nice to have the ability to use the money for payroll, but the other expenses were relatively limited. And then this, as we all know, this pandemic has placed many additional burdens on companies expense-wise. So Congress expanded the eligibility, keep in mind that these other expense categories can only cover up to 40% of the loan proceeds. But if you owned your building and were not paying rent and didn't have a mortgage on your building, you weren't able to take care of the mortgage deduction, and the utility deduction may have been relatively inconsequential for you. So, we are certainly aware of some situations where businesses were challenged, where they'd made the payroll threshold, but they didn't have all the other expenses in there. So what Congress has done is they've expanded that allowable expense category into 4 new areas, and I'll cover each in detail. So the first area is what they call covered supplier costs. Now, this is an interesting area, which we think we'll have to have some additional guidance as well, because let me read you the definition. These covered supplier costs are supplier materials that the business has to acquire that are essential to the operations pursuant to a contract or purchase order and in effect before the covered period. These are to be goods, but not inventory. So there's some clarity there about you can't just use covered supplier costs to build your inventory. So I would expect that we're going to see some additional clarification about what will be and what would not be approvable expenses within that supplier cost area. Typically at Innovative, we would think of anything in a direct cost would fall within that category. If you're buying materials to cover a contract or purchase order, how does that apply to a restaurant that's buying fresh food, fresh perishables, fresh produce, etc.? Our read of this is that probably would be applicable. But again, I think the definitive side is we're going to need to wait and see what the guidance says. So that is a big potential new category that I think will be very, very helpful to business owners. The second category is what is called covered operations expenditures. This is primarily business software. So this can be any business software or cloud computing service that facilitates business operations, facilitates the production of the product or the service delivery, the processing, payment, tracking of payroll expenses, any human resource expenses, any sales and billing functions, any accounting or tracking of supplies, inventory, records, and expenses. So basically, this is business software. So if you're using a business CRM, a business ERC, or any business software that you've had to acquire as a result of this pandemic, you can utilize the expenses of that software as part of your covered expenses. This is another area which I think businesses will have the ability to write off some of their existing business software expenses into that.
So
Marquita.
Steve, yeah, if we could just stop for a minute to kind of overarch what we're talking about here. So we talked about the initial PPP loan program from the spring, and now we're talking about a new PPP and a second draw. These 4 new expense categories, do they apply only to new draws and new loans, or is this applicable all the way back to last spring?
So I don't know that it is applicable back to loans that you've already used the proceeds for, but it certainly would apply if you are taking a new first draw or second draw.
Thanks.
Does that help?
You bet. Thanks.
So again, now if you're a restaurant, looks like supplier costs, fresh foodstuffs and so forth, not to build inventory, but for use immediately in your operation, those supplier costs would be covered. If you have QuickBooks, maybe you've got a payroll program or a payroll software module that you've used, or maybe you have a billing or inventory module that you've had to bring in because you needed that to simplify your business. All of those additional expenses are now covered.
Would that apply also to a service? Let's say the business uses a service like Payroll One, UHY Advisors, some of those services who actually do payroll or accounting on behalf of a company outsourced.
So my read of the law, I believe that would apply, but I think in those areas, we may need to get some additional clarification. So yeah, you're talking about service fees and so forth related to the production of your payroll or billing.
Absolutely, Steve. Service fees, not software fees.
Yeah. So again, it's any software or cloud computing service. In that regard, it might be considered a cloud computing service, because in many of those areas, you're basically taking the data and conveying it to a service provider then that via the cloud that provides that for you. So we'll see some additional clarification on that, and you can count on us to bring it to you first.
So Steve, let's stay on this for a minute, because we have another question. Randall is asking, does this mean that these operations expenditures can only be used to purchase new software, or can they be used to upgrade existing? What's the answer on that? Let's say we have a software package and we pay a monthly subscription fee for that software.
QuickBooks is a good example of that. A lot of small businesses use QuickBooks or Sage or another accounting software, right?
Yeah.
Yeah, I would. To me, the way I read this law is that you can now use those expenses as part of the covered expenses within the PPP loan, and then be eligible for forgiveness of those expenses. So I would say in both instances, probably the answer to that is going to be yes. But again, I expect we're going to get some additional clarification that may come out in providing real clear guidance on that. That answer your question, Marquita, or Randall's question?
Thank you. Thank you.
Excellent. All right. So that's two of them. The next one is covered worker protection expenditures. This may be the godsend as well. A lot of businesses, as we've all experienced coming out of quarantines and so forth, you get out there. I went to the bank yesterday. The bank, I actually had to set an appointment to go into my branch. They had to, meet me at the door, unlock the door, verify who I was, unlock the door, escort me in. And then basically I went into a plexiglass cubicle where they basically had the person on the other side of the cubicle handling the transaction. But we had this beautiful plexiglass window now that separated us. All of those expenses, so any operating or capital expenditure to facilitate the adaptation of the business activities to comply with requirements established by Department of Health and Human Services, Center for Disease Control, OSHA, or any government entity, you can now begin to use those expenses, whether it's an operating expense or a capital expense, as part of the allowable expenses that can be forgiven under the Paycheck Protection Program. So again, I think this is going to be something that a lot of businesses will have applicability for. Marquita, any questions in that regard?
So I have a question.
Yep.
And when I hear you say worker protection expenditure, I think of things like the plexiglass that actually protects the worker, but I think about restaurants who have built patios, purchased heaters for the outdoor patios, purchased chairs and tables for outdoor patios. Is that considered in this category?
I believe it will be, yes, because they were required in order to open and operate. They had to put those provisions into play, right, for their businesses.
Yeah.
So yeah, that's what it specifically says. So everything that the business had to do to comply with requirements established or guidance issued. So not necessarily, regulations that change, but there might have just been some guidance about how to operate during this pandemic safely.
Okay.
The other thing is all the personal protection equipment. So masks, face masks, gloves, cleaning materials, etc. All of those things are now covered under this particular provision as well.
Okay. What about remote computers? Let's say I am not a restaurant, but I'm an office, and I have switched over to a work from home environment. And in the process of doing that, I've provided Wi-Fi and a computer at home for my employees. Would that be covered?
There's going to be things like that I'm sure there are going to be a lot of questions that come in about those covered expenditures. And it seems reasonable. I'm aware of businesses that did that provided computers and so forth for their workers to be able to work remotely in those situations and keep the business up and running. It seems to me like those may well apply under this area, but I would say, let's wait and see what the additional guidance comes out with in that regard. But it is definitely designed to cover PPE and any of the specific cleaning materials and business alterations that you either made from an expense perspective or from a capital expense perspective. So I would say it's designed to cover the vast majority of those changes.
Okay, thanks, Steve.
Okay, so as you can see, I mean, you can only use the loan for only 40% of the loan proceeds for these things. But again, covering the payroll is the main thing that the Paycheck Protection Program was designed to do. But now there's a much wider array of expenses that can be factored in as well. The fourth one is called covered property damage expenditures. So these are costs related to property damage and vandalism or looting that may have occurred due to public disturbances during 2020 that is not otherwise covered by insurance or other compensation losses. So, this is obviously a somewhat targeted level of expense inclusion for those areas that were affected by that. In most of the areas that Innovative Business Advisors operates in, there wasn't a lot of that type of activity, but we even had pockets of it in the city of St. Louis and otherwise, where there may have been some businesses that experienced these areas. But now that is now a covered expense that you can include in your justification for forgiveness. The next key thing is that they've expanded what does payroll cost mean. So the payroll cost now includes the employer portion of the group health insurance as well. So it's not only all the direct wages that you're paying for each of your employees, but it's also the employer portion of the group health insurance. So another area of expanding expense coverage for businesses that is now completely forgivable under the Paycheck Protection Program. So I think overall, you got to look at these and say, this is a pretty wide expansion of the business expenses that are now included as new provisions into the PPP loan program. Any particular questions on these, Marquita?
So a question for me, and that is, I know when we had the last program come out, there was an indicator that we had to do some sort of a formula or calculation around whether or not employees were still employed or whether our payroll dropped a certain percentage. And I can see clearly now with these other expenditures being covered that you could cover an entire 2.5 or 3.5 month payroll equivalent loan with a fair amount of these expenditures. The question ultimately, though, is there a formula or calculation that requires you to maintain a certain percentage of your payroll in order to hit that 60% for the payroll covered part?
Right. So there is a safe harbor. In essence, you're supposed to use up to 60% of the fund, or excuse me, a minimum of 60% of the funds for payroll protection, if you will. So even if your business is down, this is designed to help you cover the employee expense, in effect, to keep them from going on unemployment, if you will. So that was the original design of the program. The original intent of the program has not changed in that regard. What has expanded is they've now expanded, group health insurance as that expense is now being allowed as part of that payroll calculation. And then you've got all of these other new business expense categories that are now allowed as well.
Yeah. So Steve, I guess one of the conclusions I draw is a company or a business that owned their own real estate in the past would not have been able to well, they could have covered utilities, but they wouldn't have had as much expense in the way of, say, lease or other business or building related lease and rent expenses. Now they've got all of these others. So if you owned your own business, this could probably get you full forgiveness.
It definitely helps you in that regard.
Yeah.
Absolutely. Absolutely. So pretty significant changes. The other thing that we want to call out is the set-asides. The set-asides are definitely designed to help even the smallest of businesses as well. So first and foremost, the set-asides are designed for businesses with 10 employees or less. So the smallest of small businesses. You know, it's fascinating. The smallest of small businesses typically are the fastest growing as well. So this is, you know, they say that in the U.S., almost all employee growth comes from small business every year. So these are designed to provide some backstop protections in those regards. So they're targeted specifically to businesses with 10 employees or less, located in, and also those businesses that are located in low income areas. Those are seen as being the most vulnerable. So a low income area is defined as those areas that are below the average income for that particular market. So you know, a lot of areas of your town probably apply in these low income areas. So sometimes, you know, your business may be located in one of those areas because the demographics of the area has changed over time. So you can take a look at, go to the SBA's website and pull the various maps out and make sure that, you know, whether or not you fall in one of those areas. They did do a 2-day head start for businesses that were met those two criterias. You know, part of the confusion is I don't think there was a lot of good communication about that because the program kicked off this past Monday. And we got notice of it on Friday, about midday on Friday, that they were going to open the windows on Monday, the same time that all the lenders got notice. So, you know, it was up to the lenders and folks like us to begin to communicate that. But I think based on conversations that I've had and just today with my peer group in our large business owners meeting today, very, very few businesses were aware that this was in play. So I fear that a lot of these smaller business may not have been aware that this 2-day window existed specifically for them. However, one of the things that Congress did do is they required the SBA to go out and set aside pools of money specifically for community lenders. And if you are typically dealing with a larger regional or national bank or, you know, regional or national lender for your PPP, and you do fall within these categories, now is a great time for you to go talk to a local community lender, because you do not have to have a banking relationship in order to get either your first or second draw from these community lenders, right? So you can establish that application with them right now. And the nice thing is that Congress did set aside $15 billion specifically for the small businesses and specifically for community lenders. So, you know, there is a specific set aside. If the PPP, if the larger general fund could run out, they've got this specific pool over here that's set aside specifically for small businesses designed to be delivered through community lenders. So I wanted to call this out and make sure that people are aware of this, because if you are one of these businesses that have got 10 employees or less, and let's say you're dealing with your normal bank is Bank of America may become, overwhelmed like they were last year in this process. This would be a great opportunity for you to go to a local community bank, to one of the local community lenders, and apply for your draw of the PPP and begin to take advantage of that special allocation that's out there. So am I clear on that, Marquita, or is that kind of confusing?
No, you're very clear on it from my perspective, and I'll just share a quick story is related to John Vitale, who was covered for me last week here, and I think you shared his information. He and I were working together over the weekend, so I was able to refer someone to him. They have their portal up and running already. So John is actually, he was entering loans on Monday. And I know when you say community lenders, I'm not sure on a bank by bank basis who was or who wasn't, but some people literally were, and it's really important to get a a handle on who are the people who were putting loans in that quickly and are still putting loans in today. Because I do know some that I think of in the category of community banks we have heard are not quite ready yet.
Yeah, I talked to a smaller community bank, and I think they had some confusion because they said you'd have to go to like a Justin Peterson or something like that. And that to me wouldn't be a community bank.
Yeah, so Justine Peterson in St. Louis is specifically designed to deliver microloans for the SBA. But what we're referring to, and when we say community lenders, is somebody like a Bankstar that is solely located within a specific geography in a specific city, a small, 1, 2, 3, 4 branch community lender. A Bank of Highland might be another one, or, First Community Credit Union, these well-known, local community banks, if you will. Those are the people you just want to call them up and say, hey, are you guys an authorized lender under the PPP program? And are you accepting applications, for small businesses, particularly under the set aside?
Yeah, so I think, another answer to that question is if one bank tells you no, don't stop there. Call another one.
Absolutely do not stop there.
That's the answer, because there is confusion amongst these banks. And some of them will just choose not to participate in it. So Steve got a question from Jim here. I think he needs some clarification. Must have less than 10 employees and be in located in a low-income area. I don't think it's both, is it?
I think it's one or the other. Give me 1 second here. Yep. Yeah, it is targeted to businesses that are small businesses that have less than 10 employees and or are located in low income areas. So small businesses located in low income areas, even if they have more than 10 employees, it is targeted for those businesses as well. But those would have to be less than 300 in low income areas.
Very good.
Excellent. Any other questions regarding set-asides?
No, we're good. Cool.
All right. Very good. Well, the highly anticipated changes regarding forgiveness. If any of our audience had been on our previous webinars, they'd heard us talk about this a lot. And folks, our information was good. We had good guidance from our friends on Capitol Hill. So I'm very pleased to tell you, first and foremost, on the PPP now, the covered period begins on your loan origination date, which is the day you receive money in your account. So that's your loan origination date. Now, as a borrower, you get to choose your covered period. And that covered period can be as little as an 8-week period or as much as a 24-week period. But the borrower now gets to choose exactly what that covered period means. So there's a lot more flexibility in that 8 to 24-week period. When PPP first started, the part of the huge confusion was, what is that covered period, right? And it seems like the definition of covered period has just really grown over time. But now the borrower gets to choose that covered period on the small end at 8 weeks and on the maximum end up to 24 weeks. That's a very nice change. The big thing is, from a forgiveness standpoint, there is now a new simplified application, and the form number has been identified, but the actual form has not been published yet, or if it has, we haven't received it yet. I was looking first thing this morning before I left for my peer advisory group, and I hadn't seen it yet in my email, but there is a new simplified application. So if you receive a loan, either the first draw or second draw of $150,000 or less, there will be a very simple one-page application that is, in essence, as simple as applying for the loan was. And all you have to do is provide the details of your loan, date of loan, amount of loan, loan number, etc., and then simply check all of the certifications and sign what's called an attestation at the bottom, saying that you use the funds as they were designed to be used. So you do not have to provide all the documentation, the backup documentation that illustrates exactly how you use the funds. So this is a big change for 87% of the recipients of PPP loans were for 150,000 or less. The converse of that is, if your loan was more than 150,000, you are going to have to use one of the 3 different forgiveness application forms that we've talked about on our channel at great detail over the past several months. And you will, in those situations, have to provide documentation attached to the application that shows exactly how you use the funds. So for 87% of borrowers, you don't have to do that anymore. All you have to do is just certify that you use the funds as they were designed to be used, and you're simply providing that one-page forgiveness application, which your lender will then enter into the SBA portal, and the SBA is actually doing an outstanding job of responding to most forgiveness applications within a 2-week window, as we learned a couple of weeks ago when we had the SBA rep on the call with us. So some pretty big changes there.
So Steve, I was just on the OMB website, and there is a version of the form 3508S that was published effective 12/31. That is the most current version.
Yeah, the 3508S, I think we've already published that on our site as well, Marquita. There's a new one, and I apologize.
There's a newer one, okay.
Yeah, I don't have this new one-page application form number in my notes today. I've got it in my office, but one thing that our audience can count on is we will post it in the portal as soon as we have it.
Okay, thanks.
All right. 2 other key things. First off, there was some IRS guidance that came out that said that forgiven loan proceeds would be potentially 1099 to the borrower, which would have to be counted as income. Congress cleaned that up and said absolutely not. Forgiven loan proceeds will not have to be recorded as income to the borrower. So if you were an independent contractor and you were able to take advantage of a PPP loan, you're not going to get a 1099 from the government that says, hey, you got this level of income that was forgiven. The other key thing was the IRS had said you could not use any covered expenses on your business tax returns. Well, Congress cleared that up as well. Congress has said clearly PPP loan proceeds, and whether they were forgiven or not, are not taxable to the borrower. So you can use covered expenses meaning those that you applied for forgiveness for and were granted forgiveness for the use of the PPP funds for those expenses. You can now use those expenses as a deduction on your business tax returns for 2020 or 2021. So huge changes to the whole forgiveness process on PPP loans. And I think what had originally happened was the CARES Act came out of Congress in March of last year, and then the various government agencies kind of made their own interpretations of how the law was going to be applied. And our congressional leaders in their infinite wisdom came back and said, no, that wasn't exactly what we intended to do. So they cleaned that up in this Economic Aid Act and made sure that nobody is going to be taxed because of their business having, maybe elevated profits because they were able to get these loan proceeds, which they used to cover some of the business expense. And if you didn't put those expenses on your tax returns, it might have artificially inflated the profits of your business. Congress cleaned all that up and said, nope, PPP is a non-taxable event for businesses. So any particular questions in that regard?
None so far, but I'm smiling. That's good news.
Yeah, everybody should be smiling. That is huge news. Huge news. So
Steve, I wonder how the states will recognize that.
Yeah, hopefully the states will follow that. Yeah, typically states tend to follow the federal government in that regard. And Terry, I think it's going to be interesting to see, but yeah, hopefully you're right about that.
You don't live in Illinois. That's not a typical city.
Yeah. And with what they did last night on the crime bill, yeah, I kind of feel better about that. So what do you do now, right? What do you do now? Excuse me, I went the wrong direction. As a business owner, you must be prepared to act. And again, Terry and I and Marquita have said this conclusively for what, 10 months now, I guess, Marquita, right?
That's right.
We've been preaching this same message. It's not changing now, folks. Be prepared to act. Make sure you're current on all your business operating reports, right? Push your accountants, push your bookkeepers, make sure you're current and that you've got all the data. Make sure you're current on all your business tax filings and extensions. I think people saw that with the $600 economic stimulus monies that came out. If you didn't get the economic impact payments as they were recalled, it may be because you weren't current on your tax filings and extensions as individuals, right? And make sure that you've got not only your 2020 stuff current, but make sure you've got readily available your 2019 information. So you as a business owner have a responsibility to really begin to see what was the effect of the pandemic. I know you guys have lived it day to day, but you're going to have to illustrate it to lenders if you're going to take a second draw of the PPP. And up front, we don't have specific guidance yet on exactly what you're going to have to show. We will be sharing that with you just as soon as we do, but you are going to have to show that there was a 25% or greater impact on your business in order to get that. And again, I just want to reemphasize, community banks are given preference. So, this is a great time for you to reach out to your local community banks. And if you don't have that relationship, develop that relationship because they're in a position where they are advantaged to help you right now.
And Steve, I can't underscore what you just said any more than what you just said. Even for people or those businesses who think they are not going to specifically apply for a PPP loan. And I shared with you last week, the reason I was not here was I was a part of a review committee for a local grant, totally unrelated to feds. The money ultimately came from the feds, but that grant was announced, the app process started, and decisions made in 3 weeks. So you have no time. I mean, you have to act on a dime in order to get access to this money. And there's money out there even beyond things like the PPP that we're talking about now, but you have to be prepared to act.
Boy, so true, Marquita. You gotta have your ducks lined up. And I think the other thing, Marquita, that we should stress is that, as you were part of a team that was doing the evaluation for community block grants, there is a lot of aid out there. So, we're referring to federal paycheck protection programs here, and our webinars have been focused on federal aid. And there is a lot of that available out there, as you guys know, if you've paid attention to our webinars. But do not overlook states and counties and local communities, because as you so rightly called out, Marquita, your local community stepped up and pulled some federal block grants that they were able to get, and from a community perspective, provided grants, non-repayable grants, if you will, to local businesses, right?
Absolutely. So we do have a question here from Christy, Steve, and essentially she wants you to just quickly repeat and recap. When is the second draw app process open? So these are for those who got the first PPP, now ready for the second draw. What's the timing on that?
If you're a small business or operating in a low income area, you can apply today. If you don't meet any of the small business, meaning 10 employees or less, right? If you don't meet those two requirements, you can begin applying on Monday.
Thanks.
So we're getting up to the top of the hour here. I want to let you guys know that there's a lot to talk about next week as we bring to you a whole new webinar on the SBA, what's called the Lending Debt Relief Program. So every one of the SBA lending programs now have some very special provisions, and folks, you do not want to miss this. It is incredible what is now available to you as a business owner. And we're going to cover that in detail next week, all the fees and rates. There are a lot of special set-asides in those areas, and it's going to take an hour in and of itself just to cover all of the new programs that are available from the standard SBA lending programs. In addition to that, the following week, we're going to go back and just do a recap on update on all programs. We are expecting various clarifications and guidelines. We're on the lookout for them day by day. And we expect in a couple of weeks, we'll probably have a lot of specific things to talk about as the various agencies, issue their clarifications about how to apply for these various programs. So that's what we've got upcoming in the next couple of weeks. We thank you very much for your attendance and are committed to staying on top of this so we can bring you the most recent information. And then I'll just give you the IBA resources again. So you guys got a lot of resources here which you can take advantage of, and all of those can connect you back individually to Terry, Marquita, or myself.
Okay, thanks so much, Steve. And I'll just remind everyone as we begin to close the program that everything that you saw or heard today will be available to you on the Innovative Business Advisors YouTube channel. That will be posted probably by midday tomorrow. You will see the PowerPoint presentation, a recording of this entire webinar, and any supporting documentation that Steve referenced. Look for an email giving you a link to go out and find all of this information. So with that said, let me give both Terry and Steve an opportunity for any last comments before we close the webinar down. Terry Lammers first. Any comments you'd like to make as a closeout?
Probably just to reiterate that you do need to act quickly and the importance of having up-to-date financial statements.
Great,
Yeah,
thanks, Terry. Steve,
very true.
take it away.
So very
Last
true.
comments.
Lots of stuff to consider here, folks. But what Terry said is so very true. Make sure you're in a position to act, right? Getting in line to get your application in either for your first or second draw, now is the time to do that. And I think the lending community, from all indications we have, they're expecting that there is going to be high demand for this, and that these programs, the money probably won't last until the end of March. So we strongly encourage you, get all of your stuff together and get your applications in, at least get in line. Because at the end of the day, even if you determine that you may not need it, it's nice to have the opportunity to have it and have it there for you if you do need it. So Marquita, thank you very much. Appreciate it. Great to see you back. Look forward to having you again next week.
Okay, great.
See you guys.
We'll see you next week.
All right. Make it a great week. We'll see you then. Take care.
Bye-bye.